Hello everybody, welcome back to Valuation Investing, and today in this video I'm going to be going over UnitedHealth Group, and they have earnings in a few days on July 29th, and why I'm going to be telling you guys why I believe that this could be a huge changing point for this company. And if we first take a look at UnitedHealth right now, we can see over the past year the stock is down 50%. And if we can take a look here, during about April of 2025, we had a huge drop in stock price where the stock dropped over 20% in one day because they missed on their earnings and revenue. And ever since then, we've been on a lower trajectory in the stock price. And right now, we are near a 52-week low, which was $248, which was hit in around May of 2025. But ever since then, we've been slowly grinding down in the stock price. And taking a look at the dividend yield, right now, UnitedHealth's dividend yield looks very intriguing at a 3.15% dividend yield. And looking at the market cap has dropped significantly because the stock price obviously has dropped significantly as well. At a $250 billion company, UnitedHealth is valued at right now, which they're valued before at about over $500 billion. So this company has fallen a lot, and its valuation has been cut in greater than half. So this could be a good buying opportunity, but I'm going to be waiting for July 29th. July 29th is going to be the day to be looking at this company to see what it's doing and what they report. But I'm going to be going into what this company I think is going to happen during earnings. I'm going to be going into the financial health of this company. And then at the end of the video, I'm going to be using my intrinsic value calculator to determine if we should be buying this stock today and if we should be buying after earnings. But first, I'm going to be getting into a few health insurance companies that just recently had earnings in the past week. And I want to look at the trends of these companies since they're in the same industry as UnitedHealth. So taking a look at Centene, this company is mainly focused on government-funded programs for their health insurance. So they're more focused on that than UnitedHealth, but they are pretty similar to UnitedHealth. Taking a look at their earnings just reported on the 25th, we can see that they missed by 39 cents, and they actually reported negative earnings. They reported negative 16 cents for their normalized EPS, and their EPS gap was at negative 50 cents. So they missed this earnings per share by a huge margin. But taking a look at the revenue, they beat revenue by over $4 billion, and they reported $48.74 billion. And taking a look at this, analysts are underestimating their revenue expectations, but overestimating their earnings per share, which makes sense because all these companies so far has had a problem with their margins, and the company is saying that they're targeting margin improvements and a return to profitability in 2026. So this company is trying to get it profitable in 2026 because they've had a lot of higher medical costs in this company, which results in negative net income. But taking a look at another company that reported, UnitedHealthcare. As we can see with UnitedHealthcare, very similar trend here where they missed on their earnings per share, but they did report positive earnings per share at $5.48 for their normalized EPS, and their GAAP EPS came in at $4.75. Yes, they both missed on the earnings per share, but it does look better than Centene. And looking at the revenue, they beat by over $480 million, reporting $11.43 billion. And taking a look here, the UnitedHealthcare actually fell 14.4%. While UnitedHealthcare actually went down a lot, surprisingly, Centene went up a lot. I think that's just because even though Centene did miss, it wasn't as bad as people feared. And also the problem with this company, Molina, they said that they increased their medical care ratio by over 2% in just 1 year, going from 88.6% to 90.4%, meaning this company is paying more expenses for their customers, resulting in lower profit margins. And this company revised its full year 2025 adjusted earnings guidance to be no less than $19 per share. So while this isn't that bad, it is lower than what analysts expected. But now let's get into UnitedHealth, in which UnitedHealth, like I said, has their earnings report on July 29th, in which, taking a look at their last earnings, where the company fell over 20% in just one day, we can see they missed on both the earnings per share and the revenue, where the revenue actually was surprisingly lower than the earnings per share, even though in this industry so far in the last earnings report, with in the past week, we can see that the earnings per share was the big disappointment, but last quarter with UnitedHealth, it was instead the revenue, which missed by over $2 billion. So that's a big problem with UnitedHealth. But taking a look at analyst expectations, as we see with the EPS gap actual, they expected $6.85 last quarter, but for this quarter, look at the huge drop in analyst expectations, all the way down to $4.22. That's almost a 33% decrease in earnings per share. Cutting the earnings per share estimates by 1/3 is very high, especially for a company like UnitedHealth that is very mature. And also, taking a look at the EPS revisions over the last 90 days, look at these revisions. None have increased the EPS revisions, but 22 have decreased their revisions. So this company is looking like it's going to have a pretty rough earnings, but I do think that this could actually benefit the company, and it is priced in that this company is going to do pretty bad. And taking a look at the revenue estimate, they're estimated $111 billion, which is an increase from last quarter. So the revenue growth rate is going up and the earnings per share is going down, which is a very imminent trend for these healthcare companies. And taking a look at the previous 5 years of earnings per share for UnitedHealthcare, we see that the EPS has been increasing over time. It's actually been increasing at greater than 10%. But with this recent estimates from analysts, as we see, their last earnings per share was over $6. Now they expect about $4.22. So if I draw this bar, this is where the analysts expect their earnings per share to be. They're expecting a pretty big decrease in their earnings per share. And this is going to be down, like I said, about 1/3 from last quarter. So this looks pretty bad for the earnings per share. But going over to the revenue that is expected for UnitedHealth, over time, their revenue growth rate has been growing at a greater than 10% rate. So this company has been growing very fast, but has been hitting some roadblocks recently. But even with this revenue growth rate and analysts expecting the EPS to drop by about 30%, they still expect this to still go up just a little bit in the next quarter. So like I said, the big thing about these health insurance companies isn't the revenue, it's the profit margins and the medical costs. But another big problem with UnitedHealth that I'm going to be looking for with this earnings report is the DOJ investigations against this company for their Medicare billing practices. And the big reason why this is a problem with UnitedHealth, look at how much billions in sales they had with their Medicare billing. They had $139 billion in sales with their Medicare Advantage business. So this is their largest revenue segment in the company. And taking a look at what the DOJ is conducting, they're conducting a civil investigation into whether the company inflated diagnosis to trigger extra payments to its Medicare Advantage plans. So with this drawing I made right here, this is a pretty simple explanation of what's happening. A patient's coming in and say they're slightly sick, but UnitedHealth is over-exaggerating the sickness that they have in order to get greater money. But the DOJ hasn't come out and said that they have necessarily evidence for this, but it is definitely a worry for the company. But nonetheless, if this is true, this could be a very bad look for the company and could potentially make this company go down under. But do I think that this is necessarily going to happen? Probably not, but you never know. I would be worried about this, but that's why we need to wait a little bit. And with this next slide, looking at what I expect for July 29th for their earnings, I expect margins will decrease by a large amount. I would expect these margins to decrease by about 50%, in which they just had 5% net profit margins, and I expect the net profit margin for this next quarter to probably be about 3%. I expect it to go from 5 to 3% in just one quarter. And then the next thing I'm going to be looking at for this earnings report is the revenue. I believe the revenue is likely to be in line, but like I said here, if revenue misses, I believe the stock will continue to drop by a huge margin. If it's less than what analysts expected, because looking at the other health insurance companies that reported, they all beat on their revenue. But if UnitedHealth happens to miss, I think this is going to be really bad for the stock price. Now, looking at the EPS, it is pretty likely that they will miss due to 20 plus revisions, like I said earlier, and higher medical costs, which is decreasing their profit margins. But if the EPS beats, I believe the stock is going to rally like crazy. If the EPS beats, I could see the stock being up greater than 10% in one day. If the EPS happens to beat these estimates, I think this could look really good for the stock. And then I also do believe the EPS guidance will be slashed for the full year. Probably not by a huge margin because I think UnitedHealth is a slightly better company than all the other health insurance, but I still do think that they're going to slash their earnings per share. And if they don't, once again, I think this stock will rally like crazy. Then finally, the big concern is looking at any statements on legal issues in this earnings report to see if they paid any legal issues or settlements, but probably not. They won't probably cover that, but if they do, we would really like to see what they have to say. Now, getting into the financial health of this company, we can see with my 7-step stock analysis, we have 6 out of the 7 check marks, in which the valuation, which is the P ratio and forward P ratio, the P ratio is at 11, meaning right now you're paying $11 for $1 of earnings per share, and the company is profitable. And the forward P ratio is very low, under 30 at 12, meaning you're going to be paying $12 for $1 of future earnings per share. The only thing I don't like about this is see how the PE ratio, which is the trailing P ratio, is greater than the forward P ratio. If it's greater, that means analysts do expect the earnings per share to decrease over the past year. So that's a worry for me because we want to see the forward P ratio less than the trailing P ratio, but at least it's not a big discrepancy between the two. And also the revenue growth rate is growing at 11% year over year over the past 5 years. So the sales of the company are doing well. The EPS growing at 13% year over year, also growing well. Shares outstanding are decreasing over time, which I really like. And I would really like to see in the earnings report that they are buying back even more shares this quarter. Because if they buy back a lot of shares, that's going to be a good positive for us investors and shows that they have confidence that they can turn this around and hopefully continue on the trajectory that they were doing. The only problem I have with this company is the debt to equity ratio at 77%. That means that they have about 0.77 times the amount of debt compared to their equity. At least it's not over 100%, meaning they have more debt than equity, but the balance sheet isn't amazing for this company, but it's still one of the best for health insurance. And analysts still expect this company to grow at a greater than 9% rate over the next 5 years. So pretty much the financial health of UnitedHealthcare looks very good. And with this earnings report coming up, this could really determine the stock price in the future. And I think it actually is more likely to be positive than negative for UnitedHealth on July 29th. But with this being said, I'm going to be using my intrinsic value calculator to determine the fair value price of the stock and where I would potentially be buying this company at, because I'm personally going to be waiting till after their earnings report to get a better picture of what's happening in the health insurance space, because we still don't have the full picture of what's really happening right now, because it's really just starting to affect these companies. So with the first thing I have to do is the future annual revenue growth rate over the next 10 years. And I think a fair revenue growth rate for this company is probably 7%. I'm going to be slightly conservative here, but I do think 7% is definitely reasonable because the company was growing at about 11% year over the past 5 years. Analysts expect them to grow about 9% over the next 5 years, so I'm going to be slightly less than analysts, and I think 7% is fair. Now for the future profit margin, which I think is going to be the hardest one to predict because the profit margin is starting to go all over the place because of these medical costs. But as of right now, their profit margin, is at about 5%, and it was all the way up to about 7%. But I do see this going down to about 3% after this earnings report. But we got to think, this is in the next 10 years. So do I think in the next 10 years that the medical costs will likely be affecting this company? I'm going to say probably not, and I think a fair future profit margin is 5% to be slightly conservative, because they've been running anywhere from 5 to 6%, so I'm going to put 5%. Now for the future P ratio. The P ratio of UnitedHealth has been anywhere from about 10 to 25 over the past 10 years. Right now, like I said, it's trading at about a 12 P ratio. I think they deserve a slightly higher P ratio in the future, just because this is actually a decent company and it's not growing at a very slow rate. It's still growing at 7% each year, which isn't too bad. Because look at other companies like Johnson & Johnson and Procter & Gamble. Yes, they're not having a lot of turmoil in those companies, but they're trading at a 20 plus PE ratio. And the stock market's trading at over 25. So I'm going to put a 15 PE ratio for UnitedHealth. Now for the shares outstanding. They've been decreasing at about 1% each year, and I think they're going to remain doing that because they're a mature company, and they're just going to continue to buy back shares for their investors. And with that being said, in the next 10 years, I get a future share price for UnitedHealth at $735 per share, with the current current price at $280, I think if you bought this today, with these conservative assumptions, you can make about a 10% return. But I think I would be looking into buying this company if it got under $250, because I think you could get near a 12% return. And if we were slightly bullish, let's make some bullish assumptions on this company. Say they grow at 9% each year revenue, and then a 6% net profit margin, which they've hit over the past 3 years besides this recent drop, and then a future PE ratio of say 17, because they were trading at about a 20-25 PE ratio, then I'd get an average share price in the next 10 years at $1,200. And if we change the current price to $280, we would get a return of about 15.7%. So me personally, I would probably be looking into buying this company at $250, especially if the earnings report isn't as bad as what people expect. If they do what I believe they will do, I think I might get into this company after July 29th at about $250 if it gets down to that. But if they do have a lot of bad news, I think I would be staying away from this company, because this company does look like they have a bit of corruption. So with that being said, thank you guys for watching this video on UnitedHealth. Please subscribe, hit the like button, comment down below what stocks you want me to analyze next. Also, comment down below UnitedHealth, knowing you watched this entire video. And I am thinking about making a new series where every weekend I'm going to be analyzing certain stocks you guys comment down below. So I will feature some of those stocks in a video every weekend. So please comment down below, and thank you for watching.